All right, today we're going to demystify the world of Forex trading. I know, from the outside, it can look like this crazy universe of complex charts and super confusing jargon. But stick with me, because by the end of this, you're going to see how it all really just boils down to a few core ideas. Let's jump in.
Yeah, if you're new to Forex, this screen probably looks pretty familiar. You've got the charts, the jargon, just the sheer volume of information. It can feel really intimidating. You see all these lines and numbers and you're just thinking, where on earth do I even start?
But here's the secret. What if I told you that all of that complexity, every single one of those strategies, is really just trying to solve one single fundamental problem that every trader faces every single day?
That's it. That's the whole game. When do you get into the market and when do you get out? Everything we're about to talk about, it's just a different way of trying to answer that one crucial question.
So to figure out that big question of when to buy or sell, traders tend to look at the market through three different lenses. You can think of them as different philosophies for trying to predict where the price is headed next.
So here are the three big ones. First, you have technical analysis. These are the chart watchers. They're constantly asking, what is the market doing right now? Then you've got fundamental analysis. These folks are more like detectives, digging into the news to understand why the market is moving. And finally, there's market sentiment. This is all about gauging the crowd's mood, asking who is feeling confident or bullish and who's feeling nervous or bearish. The truth is, most strategies kind of blend all three.
Okay, so let's dive into the most visual of the three. Technical analysis. This is where traders become part detective, part artist, looking for clues that are hidden right there in the price charts.
At the heart of technical analysis is this one core belief. History has a habit of repeating itself. The idea is that all the information out there, economic reports, political news, everything is already baked into the current price. So if that's true, all you need to do is study past price patterns to get a good idea of what might happen in the future. So one of the most basic concepts in this world is something called support. Just imagine a price is falling, but then it hits a certain level and bounces right back up, kind of like a tennis ball hitting the floor. Well, that floor is the support level. It's the point where buyers tend to jump in and say, okay, the price is good, I'm buying. And the opposite of support, you guessed it, is resistance. This is basically a price ceiling. The price is trying to climb higher, but it hits this invisible barrier and gets pushed back down. That's a point where sellers often get more aggressive and decide it's time to take their profits.
And this right here shows the simplest technical strategy in action. Traders try to identify that floor and that ceiling. And the game plan is pretty straightforward. You try to buy when the price gets near that support level, and you look to sell when it gets close to that resistance level. In a nutshell, it's a strategy built on predicting those bounces.
All right, now let's switch gears and look through our next lens. If technical analysis is the what, then fundamental analysis is all about the why. This is for traders who really want to know the story behind the price action.
And this really gets to the core of the different approaches. A fundamental trader isn't just looking at lines on a chart. They're basically investigative journalists. They're digging into real-world events, asking those big questions. Why did the US dollar suddenly get so much stronger? What political event just caused the euro to drop?
And here are their main clues. They are watching every little detail, from economic growth rates to huge things like interest rate decisions from central banks. They're looking at unemployment reports, inflation numbers, and any major political shifts. You know, a really positive economic report can send a currency soaring, while some unexpected political drama can cause it to tank.
Okay, so we have our methods of analysis, but knowing how to analyze the market is really only half the battle. The other half is all about figuring out an approach that actually fits you, your own personality, and your own temperament.
And this is absolutely crucial. A strategy that works wonders for a high-energy, risk-loving person could be a complete disaster for someone who's more patient and cautious. The goal is not to find the one single best strategy in the world, but to find the strategy that is the best fit for your personality. So to figure this out, just think about your own temperament. Are you a scalper, someone who gets in and out of trades in minutes, even seconds, just to grab tiny little profits over and over again? Or are you maybe a swing trader, holding positions for a few days or weeks to catch a bigger market wave? Or maybe you're a buy and hold investor, focused on the long-term story and not worried about all the short-term noise. Each one of those requires a totally different mindset.
Okay, so we've covered the different ways to analyze the market, and we've talked about different trading styles. Now, how do we actually combine all of this into a practical, personal approach? Let's build our toolkit.
Here's a simple 4-step framework you can use. First, pick your primary lens. Are you a chart person or a news person? Start there. Second, identify a specific strategy that fits that lens. Third, you gotta match it to your personality. Are you a scalper or a swing trader? And finally, and this is probably the most critical step of all, manage your risk. You should always know your exit point before you even think about entering a trade.
So if there's one single thing to take away from all this, it's that there is no holy grail in trading. There's no magic formula. The most successful traders don't just have one hammer they use for everything. They build a full toolkit of different strategies that they can use for different market conditions. And one last tool for that toolkit is this idea of volume. I love this quote because it's so true. Volume really is the gas in the tank. Think about it. A price moving on its own is one thing, but a price move that's backed by high volume, meaning tons of traders are all jumping in, that shows real conviction. That's the fuel that makes a trend strong and sustainable.
And that brings us to our final thought for the day. In a world with algorithms and AI that can execute trades in microseconds, what's the role for human intuition, for psychology, for sentiment? Can a machine ever truly understand the fear and the greed that really drives the markets? That's a question for you to ponder. Thanks for watching.